Okay, thank you, Fran. It's a great honor to be here. I was just chatting to some of my friends over the tea break, how much I got impressed with the gathering. I have been to a lot of China summit conference in China, in Europe, in many locations around the world. And I think today is probably the most high-power gathering I have seen in any location. The level of engagement, the level of attention on building collectively a strong New Zealand brand in China and the interplay with doing business in China. And secondly, I do like that photo. That's a city I was born, and when I was childhood, I played around that gate quite a bit. So it's feels homecoming in the remote place in Auckland. It ties the north with Beijing, the heartland of China. I think this morning's discussion touched a number of very important issues. I think what strikes me more is there is a true understanding among the speakers, among the New Zealand businesses, on the requirement on doing business with China, requiring a longer-term view and requiring a vision and requiring the understanding of the cultural differences. So really, we also need to, when we talk about investment from China and into China, I guess we probably need to also look at it from on a global basis. Just to quoting a few numbers, I'm very pleased that I didn't prepare slides pack, and I realized how quickly those numbers have become outdated. So this morning, when I hear some of the presentation, I was like, gee, I got it right. I didn't do any slides, so those numbers are not right. Later on, I think Ivan will outline more numbers from the embassy perspective. So just in a nutshell, the Chinese has really started to do overseas investment. That's following years of receiving foreign investment into China. Just on Chinese overseas investment, in 2006, that's the year China really started to do overseas investment. That's around 21 billion US dollar. And by the end of last year, and this number has grown to 88 billion. So it's a fourfold increase. While the number looks very big in terms of growth rate, but my personal view is the Chinese overseas investment is only in its infant stage. It's just about to start. Many of you probably will recall at the very beginning when China started to make investment, typically into Australia, I think at that time, is very much with an aim to acquire access to natural resources, mineral, oil and gas. There's some investment in the Middle East as well. That's very much focused on oil. I think while the investment into those minerals, oil and gas are still continuing, but we do see there are some changing trend within the Chinese overseas investment. I think a growing focus is now on the food supply, on agri, and I think many speakers have touched upon that. Anything with protein, with crops, with cotton, we see that in a very vigorous way. There are Chinese investment for example, in South America, they have leased a large area of land growing crops, soybean in particular. They ship into China. There are also investment into Africa, then again lease land, then grow crops, then shifting those into back into China. I think one of the themes already touched upon by the speakers this morning is that limited agricultural land in China. China would need either to buy crops or buy protein, either in the form of milk, product, or in the form of meat. The third investment trend is very much to gain market entry, market access. That's very typical with the Chinese investment into Europe. there are Chinese companies who are buying engineering company in Germany, buying R&D capability in the UK. So I think those you probably can generally term it as they gain some technology input and market access. I think the recent Haier's acquisition of Fisher and Parker here in New Zealand probably can be classified as one of those strategies. The fourth element, the fourth trend is that increasingly Chinese investors are using overseas investment acquisition as a way to up-tier their brand. This one is probably under surface a bit. I'm sure in this room there are many golfers. So Homan is a very premium brand for golfer, especially in Asia. It's a Japanese brand, but now the majority controlling it is a Chinese private group. And similarly with fashion chain like Folly is Chinese controlled. How do you call this? There is a hotel chain, Club Med, is again a Chinese investment. So there's quite a bit of investment going into that area. Another trend again is commercial diversification, and that's more increasingly visible from Chinese utility and infrastructure companies to look at earning diversification. The Chinese market they're facing is very much matured, and in many regards they operate on a semi-monopolized basis. So now they are looking at to diversify their income stream with investment into Southeast Asia and sometimes into the mature market as well. And the last category I think is the export of not the physical goods, but the skills and the capability. And again, this is very much visible in the area of project like hydropower, railway, port, and very visibly in developing countries in South America, in the Pacifics, for example. So I think all of those underline a huge diversification of the business rationale of Chinese companies making investment overseas. And I think it's probably not a surprise for us to see in the coming decades that as the globalization of Chinese company going on, China will become not just the manufactured good provider of the world, but also the capital provider of the world. In tandem with that process, I think I want to touch upon a key development, which is renminbi's liberalization. So I think renminbi to become an international currency is just a matter of time, and it will also be a reflection of the relative and global position of China's trade and investment. In that, I think the ongoing investment over the past 3 or 4 years are probably largely to change the perception and start to push for the use of renminbi as a way of pricing international trade, settle international trade. That will continue, and I think they have reached quite a bit of success with trade in Hong Kong and also with Southeast Asia. I think that will become increasingly more widely used across the globe, including New Zealand. The second phase of the internationalization of the renminbi will be very much focusing on renminbi to become a financing currency and an investment currency. That will require more fundamental changes in China's currency regime, and also the development and openness of the China's onshore capital markets. We have seen some positive signs in that. I think the journey has just started. The recent announcement of the Shanghai Free Trade Zone is probably a good example of how China, the policymakers are trying to make that happen in accelerated, time scale. I can stand here to talk about it for another 10 minutes of what it means initially with the Shanghai Free Trade Zone. But to cut it short, it's very much they're trying to encourage freer trade movement, physical good, transshipment, and based on that to develop freer financial transactions. And I want to finish just with a few sentences on how I see the China and New Zealand trade and investment is going. I have learned a lot this morning, being someone who have never really spent time being a resident here. So this morning is an enormous learning process for me. But just looking from my own, perspective, I think for trade and investment between the two countries to be really meaningful and strong, I think there are very strong bases for the two countries to work together. The trade, the minister has outlined a very strong growth, and we all know the rationale. The two countries are strategically fit together for some of the things China needs and New Zealand can produce with quality. The people flow, as we just heard in the previous session, are very strong. Education, tourism. So I think those lay the foundation for people's understanding and appreciation of each other. And the investment, I think, is just starting. And based on my incomplete, numbers, I think New Zealand is only accounts for probably less than 5% of China's overseas investment at this stage, and roughly about a third of the Asian investment New Zealand has managed to attract. So I think it's just being small is not a bad thing. That means there are more mileages to be driven in that direction. And also, I would also encourage the investment is not just a one-way flow while we are looking at the more Chinese investment into New Zealand. We also need to encourage more New Zealand investment into China. Last word probably is marketing. ANZ being the only New Zealand bank with a meaningful presence there. We are looking forward to help you guys with that two-way trade and investment flow. Thank you.